So glad you could join us today. If you've been looking at the crypto charts lately and wondering why everything looks like a sea of red right now, you are definitely in the right place. Today, we're diving into a brand new weekly crypto analysis.
Yeah, this one just published on Monday, March 9th, 2025. It's straight from the team at Vantage Plus.
Right. And it's the perfect time to really dig into this data. Our mission today is to cut through all that noise and, figure out exactly why negative sentiment is just suffocating the broader markets right now.
Exactly. And we are also going to decode the specific chart levels for 4 of the major tokens. That way you know exactly where the hidden traps and, well, the springboards actually are.
Okay, let's unpack this because crypto doesn't just crash in a vacuum. I mean, we saw a solid little rally start up last week, only for it to get completely crushed midweek.
It really did.
And the broader macro picture is totally driving the bus here. You've got ongoing tensions in the Middle East, spooking investors, plus a wider tech correction hitting the Nasdaq.
Oh, and don't forget the weekend sell-offs.
Yes, the weekend trend.
Yeah.
The report points out this recurring thing where selling pressure just spikes out of nowhere on Saturdays.
But what's fascinating here is the massive shadow being cast by the US dollar. The greenback just posted its strongest gain in an entire year.
A whole year, wow.
Yeah. The dollar and crypto essentially operate on a seesaw. When you have massive strength on the fiat side, it directly pushes the crypto side lower. If the dollar keeps flexing like this, the downside pressure on tokens is only going to get heavier.
Well, speaking of getting pushed down, let's look at the heavyweights. Bitcoin essentially erased all of its recent gains. It's hovering right around $67,909.
Right.
And since we're still early in the month, the Vantage Plus report suggests we might have already hit the ceiling.
Sure.
So where's the floor?
The immediate safety net to watch is 65,000. If Bitcoin breaks through that floor, the selling pressure multiplies.
Which means a steeper drop.
Exactly. We would likely see a drop to test the 50-moving average zone, which sits right around 57,600.
That is quite a drop to keep on the radar.
It is. Think of a moving average like an invisible rubber band based on the last 50 days of trading. It usually catches falling prices, but if the momentum is too heavy,
It just snaps.
it snaps. And Ethereum is feeling that exact same heavy momentum.
Yeah, it slipped under that massive $3,000 mark. It's trading at $2,946 now.
Right.
And that $3,000 level has always felt like a huge psychological safety blanket for traders.
It really is. When an asset loses a major round number milestone like 3,000, market psychology instantly shifts from optimistic to just fearful.
The sentiment flips completely.
Totally.
Wow.
Because it lost that footing, the charts show a high probability of sliding down toward the 2,300 neighborhood. The further it drops below $3,000, the more that panic selling compounds.
Okay, here's where it gets really interesting for me, because you've got altcoins like Ripple, XRP, which historically pumped just on pure community hype.
Yeah, didn't even need news to rally back in the day.
Exactly. But now it's sitting at 1.3482, and the charts look pretty bleak.
They do. XRP was bouncing up and down inside a shrinking wedge on the daily charts, what traders call a triangle formation.
And usually the tension builds until a token bursts out the top.
Usually, yes. But instead, XRP just fell straight through the floor of that wedge. When you break down like that, any attempt to rally just hits a brick wall right where that old floor used to be.
So the downtrend is simply too strong right now to go hunting for a dip to buy.
Definitely not a buy the dip moment for XRP.
What about Solana? Does Solana offer a better setup? Because it's sliding lower to 82.20, and the analysis calls this a true technical crossroads.
Right. So if we connect this to the bigger picture, Solana is basically standing on the edge of a cliff at $80.
Edge of a cliff.
Yeah. That $80 line could act as a trampoline, giving it enough bounce to shoot back up toward the 100 to 125 range. But considering the overwhelming macro selling pressure we've been talking about, if that $80 trampoline breaks, downside momentum will likely increase. That drop-off is going to be steep and fast.
So what does this all mean for you listening right now? It's really about trading the noise for strategy.
Absolutely.
Knowing these specific safety nets, like Bitcoin's 65,000 line or Solana's $80 trampoline, means you aren't just reacting to red numbers on a screen, you actually understand the mechanics of the seesaw.
Especially with those macro triggers like the surging US dollar we talked about,
Right.
it separates strategic market watching from emotional panic.
Exactly, which raises an important question to leave you with today.
If the US dollar's massive strength is the main weight suffocating crypto right now, what happens to these decentralized assets the second that traditional fiat currency inevitably reverses course and starts losing steam?